Today I'll be answering 3 questions. Why is FOMC meeting important? What does 50 points versus 75 points interest rate mean? And how will tomorrow's meeting affect the market? Diving straight into it, FOMC is short for Federal Open Market Committee. Now, Jerome Powell is one of the Federal Reserve board members, and they're going to be having a meeting tomorrow to discuss inflation and how to tackle that with their federal interest rates. And there has been rumors going around on Twitter since last week about the Federal Reserve pivoting. Now, the term pivoting is just another fancy word for opposite direction. Take, for example, if the Federal Reserve have already been raising rates and pivots, the pivot means they will start lowering rates. If the Federal Reserve have been lowering rates and pivots, the pivot means they will start raising rates. So it just means inverse opposite direction. In simple terms, Jerome Powell and his Federal Reserve buddies take a look at the US economy, and if they see inflation is high, they will discourage spending by raising interest rates. Now, how on earth will raising interest rates discourage people from spending money? I'll break this down from multiple perspectives. Now, from an enterprise or corporation perspective, again, in simple terms, most business transact using business credit lines or loans. If interest rates are high, the cost to borrow money will also be high, and that will eat out some of the corporation profit margins. Now, in terms of for consumers and retailers, as for us consumers, it costs more money to buy a car loan and house mortgage loans as well. So, in short, for banks, what this means is, all at the same time, if interest rates are high, anyone hodling their cash in their bank accounts, they will be accumulating more money at a higher interest rate as well. So with all these 3 concepts tied together, in summary, raising interest rates are supposed to discourage economic spending and encourage hodling your cash instead. This is very important with my trading style, as I usually look for supply and demand and only enter during very volatile with good momentum at key resistance levels. Hey, quick break. If you guys haven't subscribed to my channel, please subscribe and hit that bell notification. Hit that like button for the YouTube algorithm. I do this for you guys. I enjoy making this video. I try to pump as many short videos as possible every single day with daily updates and tremendous value squeezed into these long video formats as well. So if you guys haven't checked out my social link in the link tree, I have my social link down in the description. So without further ado, thank you so much for your time and back to the content. If you look here, this is the current and previous history of the federal interest rates. The Federal Reserve released their projection/goal here on their website. They expect to trend around 4.75% throughout 2023. Again, what the heck does this all mean? For starters, we are currently at 3.25 interest rate since announced in the last FOMC meeting back in September. Tomorrow, we have our November 2nd FOMC meeting, one last one for the end of the year in December 14th, and let's include the January 2023 FOMC meeting as well. That means, including tomorrow's meeting, the Federal Reserve is projecting a maximum rate hike of up to 1.5%, reaching to 4.75% across 3 meetings. So that's 1.5% split across 3 meetings to reach 4.75%. So if we split that up, that would be roughly 0.75%, 0.50%, and 0.25%. Just looking at the decreasing value of the 3 numbers can fool many investors into thinking the economy is merging out of a recession. In better perspective, the Federal Reserve have been aggressively raising interest rates by 0.75% each time since the May 2022 meeting, with 3 consecutive previous FOMC meetings that raised interest rates by 0.75%, and the market sees a possible pivot, wink wink, opposite direction of seeing lower interest rates in 2023. This is the big fuss all the bulls are crying about on the internet right now. Now, how does this all affect the stock market? Now, anyone on the internet saying they can predict the price action is either an insider or a liar, which is why I am comfortable admitting that I do not know the outcome of tomorrow's result. You cannot predict the market, and the only ones who can predict the market are the ones who are manipulating and controlling the market. The faster you get that in your head, the more profitable you can be in the long term. However, there is somewhat of a correlation between interest rate hikes and the S&P 500 if you look at this chart here. The blue line is the US interest rate, the red line is the US S&P 500 SPY chart. The box columns are every time there was an FOMC meeting throughout this year. So if you look closely, it doesn't always translate to bad news. Every time interest rates were raised, sometimes the markets fell, sometimes it didn't. Now, I know lines here and there usually don't mean anything, but I can't get this out of my head. So this is a bonus thing that I kind of want to share with you guys. So if you guys agree with this, please share down in the comment below what you guys think of this. So this is a long-term uptrend line since the 2008 crisis, and SPY keeps retesting this line before shooting straight back up. Now, with so much resistance going up and no resistance below, the next 2 years could be quite interesting until the 2024 elections. I feel strongly that interest rates are a political move, especially since we are rolling into the midterm elections now. For overall market health, I would prefer if Jerome to hike rates and control the economy now as soon as possible, rather than prolonging the bigger doomsday later on. If you guys found value from today's video, please like and subscribe and hit that bell notification. If you still found anything to be confusing, please ask your questions in the comment section below. I'm thinking of publicly trading a 1 to 2K account on Webull starting next week, so if this sounds interesting, stay tuned for the next video. And also check out the video hovering on your screen if you want to find out why a 1 million subscriber YouTuber in the crypto space named Alex Becker agrees with our channel's opinion. Again, thanks so much guys, thanks so much always, and I'll see you guys in the next one. Thanks, bye.